The first thing he did when he came was he overnight fired the legacy leadership and decided to completely move Kaspi Bank from their commercial business and focus exclusively on the consumer side. He's basically taken the playbooks of Amazon and Tencent and decided to ruthlessly implement it in Kazakhstan with Kaspi. I mean, this was such an obvious value proposition, and this caught fire.
Hello and welcome to the Margin of Sanity podcast. Today we're talking about a very unique company, far outside the scope of most institutional or mainstream investors. With me today on the show is the incredible AK, author of the Substack Unfair Advantage. And that is a very fitting name for the topic of today's show, since the company we're discussing has one hell of an unfair advantage. Kaspi is a NASDAQ-listed e-commerce, payments, and fintech company which has embedded itself into the daily life of almost every single adult person in the Central Asian country of Kazakhstan. The company trades at a mind-bogglingly cheap valuation of 7 times earnings and has steadily grown its top and bottom line at double-digit annual rates. Kaspi has a clean balance sheet and incredible fundamentals, but the stock has traded down since its 2024 NASDAQ IPO thanks to geopolitical concerns over Russia, inflation of the national currency, and a recent move by the company into Turkey, a shift which investors are wary of and has also resulted in the suspension of Kaspi's dividend. AK and I have both written about this company, and so I'm so grateful to be able to speak with him about it today. I have to say that this is not by any means a solicitation to buy or sell any securities. Investing always involves risk, and that is particularly true today. Always consult with a professional. We are not financial advisors. And with that said, please welcome AK from the Unfair Advantage Substack. How's it going, AK? Welcome to the show.
Hi, Margin of Sanity. I'm doing well. How are you?
I'm good. I'm very good. All right, so we got a lot to talk about today, and I do kind of want to just get into it. I'll ask it like this, just to start. Maybe tell me a bit about how you approach investing and how you came across Kaspi, and just sort of your initial impressions on the company.
Sure, that's a good question. So I look at investing, I'm pretty much from sort of the Graham and the Buffett school, where we look at investing as a partial ownership of a business. So not exactly looking into trading or holding it for a short term, but holding it for the really long term and trying to get a sense of how this business is going to be over the next, say, 5 years or 10 years. And that is sort of the principle with which I approach all the stocks that I think about or I write about and I own. The specific to Kaspi, I think I came across Kaspi in early 2024, basically through Twitter. Somebody had posted on Twitter about this company and how they had listed in, NYSE. And I started looking into the company, and I think the tweet said something like how it was going to be like the Tencent of Kazakhstan. And that's how I got into the Kaspi, basically.
Yeah. So I think it's listed on the NASDAQ, but they were listed in London, I think since 2020 before that. Kaspi, for anyone who doesn't know, is just a really special company. I guess I'll put it like that. It's a special company in a special country, and it has some really special sort of financial qualities to it. It trades at an extremely cheap price. You discovered it in 2024, but right now, it's trading at like $75 a share or so. And that amounts to about 6.5 times forward earnings, 7 times free cash flow. And this is a company that if you look at any of their financial reports, you're going to see double-digit earnings growth, double-digit revenue growth. It's just incredible. I don't know about you, but when I first saw this, I thought this has to be a fraud. I must be missing something, you know?
Oh, 100%. I think the first time I read the annual report, I had the same feeling like this couldn't possibly be true. A lot of their stats that they mentioned on their annual report was very impressive. They had grown on double-digit growth. They had double-digit margins, and they seem to have their hold on like 3 of the big pieces of commerce. They had their payments business, they had their marketplace business, and then they had their fintech business, and all of them were sort of growing. And I think the first thing that came to my mind was, well, if they are suspicious, they wouldn't be taking all the extra effort to be listing on the NASDAQ.
Yeah.
Or let alone list on London Stock Exchange, right? Because when you list on NASDAQ or when you list on the London Stock Exchange, the scrutiny is higher. You're going to get a lot more eyeballs. So it doesn't help if they want to do anything underhanded.
Yeah.
And then when I started understanding the history of the company, right, it sort of made more sense that this company has had a very interesting history. And the way they came about to where they are right now was not path dependent, and it couldn't have happened to anybody else. There was a lot of luck and a lot of execution and a lot of blood, sweat, and tears that Kaspi had to put in to come to where they are. I think, if I remember right, that they started off as a appliance retailer back in 93. I think it was called Planeta Electroniki, if I'm getting the name right.
And this was Kim's business, right?
It was Kim's business, exactly.
Yeah.
And then another anomaly that happened back in Kazakhstan in the 90s is it was common for retailers to acquire local banks. And it was sort of a way to finance the inventory and finance the customer purchases and working capital and so on. And they did. Mm-hmm. They acquired a fledgling local bank called Kaspi.
Yeah.
And then by the time 2000 came around and the credit crisis happened, they got squeezed from both sides. The economy was coming mm-hmm. down and you had a huge amount of loans that they had given out. So I think at that point, they got in a Russian private equity company. It was Baring Vostok. And then the partner mm-hmm. on this was Mikhail Lomtadze. Again, probably butchering the name here, but he was the partner from the PE side who then just decided mm-hmm. to jump ship and join Kaspi.
Yeah. And they basically just cleaned house when he showed up. He made so many changes. I mean, this was just a bank, basically. And Lomdatz, Mikhail, I also don't know 100% know how to say his name, but I think it's something like Mikhail Lomdatz. He really is the one who took operational control of the company. As far as I can tell, Kim doesn't have that much hands-on influence over the day-to-day of the company.
Again, completely agree. Because Lomtadz is a one-of-a-kind CEO. You don't see CEOs like him very often. Because the first thing he did when he came was he overnight fired the legacy leadership and decided to completely move Kaspi Bank from their commercial business and focus exclusively on the consumer side, which till then Kaspi was primarily a commercial business. It was a commercial bank and they were trying to bank with other businesses. Lomtadz shut that out and he quickly got into the consumer banking business and they started with issuing credit cards.
Right.
And credit cards was sort of their bread and butter. And Lomtadz had the same idea that Bezos had, that they want to make sure that the customers have their best experience and the best service.
Yes.
And
we make your lives easier, I think is the quote. I remember watching an interview with Lomdatz and he was saying something like when he wanted to make this all in one app, the engineers were sort of complaining because they don't really want to deal with that much collaboration and compromise and all this stuff. And they were saying, well, it would just be easier if we had multiple apps for multiple things because this company does so many things. And he said, no, well, our job is not to make, I'm paraphrasing, but he said, our job is not to make our lives easier. It's to make our customers' lives easier. Yes. And I thought that was a great philosophy.
Oh, yes, definitely. Because one of the things that he has done in Kaspi is every leader and every org is evaluated based on the net promoter score, mm-hmm. right? For those who don't know, a net promoter score it's a very simple question. They ask on a scale of 1 to 10, how likely you are to recommend this product or service to your friend. Mm-hmm. And if the number is around 9 or 10, they're a promoter. And if the number is below 7, they're a detractor. And that is sort of kind of the focus they bring to the table in terms of consumer experience and the customer service. And I think one of the first things they quickly realized was that the customers were not really happy with the credit card business. It didn't have a transparent fee structure. There were interest payments and late charges. And once again, Lomtadz makes a drastic move. He went ahead and killed that business.
Yeah.
He killed the credit card business. Again, this was sort of the second turning point in the whole Kaspi story. And now they don't know what to do. And Again, they realized that another anomaly of Kazakhstan is most of the people have to go to banks to pay their bills. And this could be the utility bills like electricity, gas. And these banks used to charge them like a percentage commission for facilitating this payment. And Kaspi basically came out and said, look, we're going to launch a mobile app where you can pay the bills online. So you don't have to go to the bank and it's completely free.
Yeah.
Easy. I mean, this was such an obvious value proposition. And this caught fire. I think this is sort of core for the Kaspi app. And this what brought in the users. This what kept them engaged because everybody had to pay these bills. They had to pay this monthly. And there was no way they were going to sort of at any point get out of this app and use another one if they're getting this done for free.
Yeah. What's kind of amazing to me is I think, you touched on it before, but there's a lot of luck, I think, sort of in the timing of this. Because, I did a lot of reading about Kazakhstan as a country and their history. And basically, it wasn't a great time to be a business in Kazakhstan for like the entire 20th century. And when the Soviet Union fell, things got even worse. I mean, and there was like they lost a lot of people because so many people who were living in Kazakhstan who weren't native ethnic Kazakh, they were Germans and they were Russians, and a lot of them left the country. And beyond that, the birth rate had fallen. It was in bad shape in the late 90s. And, finally they opened up their markets. I think one of the largest oil field discoveries to date is in Kazakhstan. And they opened up their markets to outside investment. And suddenly the economy started to turn around. And it can be kind of hard, I think, to turn the direction of a country around. But that seems to be like exactly what started happening in Kazakhstan in the sort of early mid 2000s. The birth rates fertility rates anyway, started going through the roof. The native ethnic Kazakhs, who had become a minority, second to the Russian population of the country, they had become an ethnic minority in their own country. And suddenly, because of high fertility rates, because of the Kazakh diaspora coming from all over the earth, thanks to some government incentives to get them to move back, to get them to come home back to Kazakhstan, the population started growing. The 2023 estimate were 3 children born per woman, which is a pretty high fertility rate. And the thing that's also kind of interesting to me is that most of Kazakhstan's population is young. It's one of the youngest countries on earth. It has just really good demographics. It has a solid population growth rate, great fertility rates. And because of the low population back in the 90s and the just boom into the 2000s, I think 40% of Kazakhstan's population is under 25. And a ton of those people are under 16, which is, I believe, the age you have to be to download Kaspi and use it.
Wow.
And so what's interesting to me is that Kaspi started as like a fintech company disrupting e-commerce, disrupting technology, which is sort of a backwards idea, but it was working. And because we had already seen in Silicon Valley, Amazon and all these online retailers and payments companies, PayPal was huge then. And so, Lomdats was able to sort of ride the wave of Kazakhstan's rebound and digitize the whole experience of being in Kazakhstan onto this one super app. And it's a remarkable story, I think.
I agree, because I don't think Kaspi went ahead and they had this grand plan of making a super app. I don't think we don't have a lot of examples globally. There's probably Tencent, and then there is Kaspi. And if you see their histories, and they're both remarkably similar. Kaspi came upon this whole bill payments, which was a fundamental core for them that brought in the users, that kept those users highly engaged with the app. And then they decided, okay, we can build a few layers on top. And if you see the Tencent history, Tencent did pretty much a similar thing back in the 90s. They had, instead of the bill payments, Tencent was doing messaging. So they weren't making any money out of messaging either, but they could bring in users. And this, we're talking about the early 90s. where internet was just about to be a thing. And it was not like a lot of people had computers in China. But Tencent's instant messaging caught fire and people were engaging with it. And then Tencent added the first layer, which was their digital avatars or digital goods. It was back in the 90s. And that caught fire very quickly because they had these core set of users who were engaging with the app for day in and day out. And Kaspi did the same thing where their core was their bill payments. And as soon as they started adding the first layer of e-commerce, and then inside e-commerce, they added other categories like groceries and travel. And each of these layers just kept catching fire because they didn't have to go out and acquire a customer. They had all these customers inside the app who were extremely loyal because of the core service, which was bill payments. And they could just start using that to drive incremental revenue at super high margins, which is why I alluded to it in the first place, that I don't think anybody decides to have a super app and then gets into it and makes a super app. But it just happens because, like you pointed out, you need a lot of things going internally and externally for you to be able to build one, like Kazakhstan's booming population, their legacy banking structures, which wasn't really helping anybody. And the banks were being rent seeking in terms of trying to make a percentage of a bill payment. And they had all these going on. And Kaspi was just at the right place at the right time. It was not just being at the right place at the right time. They also did the right things. So they were able to quickly start adding layers to the super app.
And, what I remember Lomdat saying was something along the lines of people just kept asking for things and we just kept giving it to them. So online bill pay, I think, came in like 2012. And then they launched Kaspi Marketplace, Kaspi Red, which is like a buy now, pay later service. And then it all just kept spiraling. They got Face ID, ATMs, Kaspi Pay for merchants, peer-to-peer payments, and it just kept building and building on itself to the point where the integration of the user experience for almost every single aspect of life revolves some way around Kaspi. And the other thing I always thought was so interesting was, imagine being a bank and knowing how much somebody's getting paid, when they're getting paid, how much money's not just in their bank account, but how much money's already out on loan. I mean, Kaspi as a bank has probably more data on their customers than JP Morgan. I mean, don't quote me on that, but imagine all the data Amazon, Venmo, or PayPal, your bank, and your credit union. Kaspi just has so much data.
100%. I think I read somewhere that Kaspi uses about 4,400 data points on a customer and this happens probably in a second when they want to give out a buy now, pay later offer for any of their purchases.
Huh.
And the other thing that you alluded to, right, where Kaspi is the bank on both sides of the transaction. So when a customer makes a payment or buys a product on Kaspi, they're likely banking with Kaspi. The merchant who's selling is also banking with Kaspi. And what that happens is, because of this, Kaspi's payment networks can authorize and settle a transaction between themselves. Because it's literally like taking an X amount of dollars from one Excel sheet to the other Excel sheet. No money has to even move anywhere.
Yeah.
And because of this, their payment business becomes highly profitable, because what happens in the West right now is you have all these different entities. You have the payment portals like Adyen or Stripe and other services, and you have your issuing bank, you have an acquiring bank, and you have your Visa and MasterCard. Now, all of these are different entities, and all of these want a slice of the pie.
Yes.
Which is a percentage of the transaction. But in Kaspi's case, what happens is, because they are the issuing bank, they are the acquiring bank, and they are the payment portal, all of this independent small percentage cuts just goes to them.
Yes.
Which is why their take rate is significantly higher on an absolute basis. I think it's about 1.2%. And I think in the West, the payment processes typically take like 0.1 to 0.2%.
Yeah.
It changes widely because the Visa and MasterCard have different kinds of tier systems and so on and so forth. But because of that, the Kaspi's absolute dollars on a transaction is very high.
And that's just the payments business, right? I mean, the take rate on the marketplace business is significantly higher, I think, like 10% or something.
Yes, definitely.
We're just talking payments right now.
Yeah. I think in the e-retail, you also have like the listing fees and then so on, like advertisements and so on and so forth. But I think in one of the stats I read that I was really impressed with was Visa and MasterCard's market share in Kazakhstan dropped from 70% to 30%. Mainly because of Kaspi. Now, Kaspi owns 68% market share that basically was earlier with Visa and MasterCard. And that's a huge moat to have because now, like we discussed, Kaspi can keep is like a toll road operator. And the more velocity the money has in the system, there is more money that Kaspi makes.
Yeah. You know, people talk about vertical integration or horizontal integration, and I'd like to coin a new phrase, which is 360-degree integration, because the entire life of a person in Kazakhstan, it's going to go through Kaspi at some point, whether it's to get your driver's license, to get your COVID payment, to get your unemployment, to pay your unemployment, to pay your taxes, to register a car, anything you want to do. With the government, to buy things in a store or online, you use Kaspi for both of them. To pay at a restaurant, they ask you cash or Kaspi. You know, there's just, if you want to pay your friend, you know, they covered the pizza or whatever, and you want to pay them half, you use Kaspi.
Yep.
And this is, other than WeChat, which is Tencent's super app, I've just never heard of anything quite so powerful. In this microcosm, if the world was only Kazakhstan somehow, if that was everything else fell into the ocean and there was only Kazakhstan left, this would be the most important company in the world.
I 100% agree. And I think probably my numbers are a bit outdated, but just even on their e-retail business, right? Their average customer in Kaspi's e-commerce transacts about 650 to 650,000 Kazakhstan tenge. And just to benchmark that, a Samsung Galaxy in Kazakhstan is around 300 to 350,000 Kazakhstan tenge. And a pair of Levi's jeans is like 20,000 Kazakhstan tenge. Now, I think what that tells me is that there is still significant upside because I'm sure a person would be buying more than just a phone and a pair of jeans on an e-commerce platform. So even though a huge amount of Kazakhstan population is on Kaspi right now and transacting, I still believe that there's a significant amount of growth that goes for Kazakhstan. 20 million people, at some point they were going to tap out and the TAM was going to be limited. But now I think the e-commerce business still has room to grow inside Kazakhstan, and they are getting into some of the other categories like e-groceries and e-travel bookings and stuff. So that is going to keep expanding their TAM as they expand into those categories. I believe they had tried out the whole dark store concept with another partner in Kazakhstan, but that quickly didn't work out for them. So they ended up buying out the other partner and decided to do it themselves. And while e-groceries might not be like a huge high margin business for Kaspi, but I think it's the whole point for them to get into these categories is to keep deepening that customer engagement with their platform. And the deeper they get that engagement, the harder it is for a competitor or for anybody to take them out.
Yeah, because I've heard slight, I don't say bear cases, but pushback on the moat, which is the last thing I would ever push back on in this case. But, you know, they'll talk about Wildberries, which is a Russian e-commerce platform, or Haliak Bank, which I think offers some fintech services. And, you know, they'll say, well, hey, eventually Amazon will come and, you know, compete them out of the market. But from what I can tell, there really isn't anyone on the horizon that is taking market share from Kaspi right now. And I don't see how you can disrupt, you know, perhaps there's some people in Kazakhstan, if I'm going to play devil's advocate, who only use Kaspi right now for e-commerce. And they just as well use another e-commerce company. Or there's people who are using it only as peer-to-peer payments, and they'll just as easily use PayPal if they get a better, deal or something like that. Not that Kaspi's really being that aggressive. I mean, like you said before, because they control every part of this, they don't really need their slice of the pie on every part of it. So customer acquisition and retention is a lot easier when you control so many different segments of the consumer economy.
That is true. I think they also have that in one of their presentations is they have like 90% or 95% of their customers are on Kaspi for the bill payments and any other payments like through QR codes or card transactions.
Right.
And then the number of people who are on the platform for e-commerce and your other e-retail categories and buy now, pay later, it's still around on the 35 to 40% range. So as these other customers who are just maybe singularly transacting on Kaspi start to use the other benefits of the platform or the other services, that would still add significant amount of highly profitable GMV into the business.
Yeah.
And that also makes a competitor very hard to displace because if you want to displace Kaspi, you need to be a bank and an e-commerce player and a payment processor because not doing any one of those three is going to mean a lower value proposition than what Kaspi already offers.
Yeah. And, we were talking before we started recording, we were talking about Amazon in India and the, things like the Amazon lockers and all these pickup points. Kaspi already has those. I mean, Kaspi isn't trying to do some cruddy, version of Amazon. They are trying to execute just as well as Amazon in their market, in their homeland. Like they know how to provide that customer experience. So it's not like the people of Kazakhstan are dying for some other retailer and Kaspi just had first mover advantage. No, they're doing everything they can to improve the customer experience, to improve logistics, and to just give everyone every single reason they possibly could to just use Kaspi for everything. It's easier. It is the easier option.
Definitely. I think, don't quote me on this, and maybe I'm just daydreaming a bit here, but what Lomtadze has done is he's basically taken the playbooks of Amazon and Tencent and decided to ruthlessly implement it in Kazakhstan with Kaspi.
Yeah, I don't think that's a daydream at all. I think that's almost exactly what's happening and what happened.
And that kind of also, that's what made it easier for me to analyze the company because it just rang the bells of, oh, I know this Amazon has done this before, or I know this Tencent has done this before. And it was easier to see why that worked. But I think what you need for such a model to work is, like we discussed before, you need a strong, highly engaged core service, and you need somebody at the top who can drive these kind of business decisions. See, they have to be agile, they have to be quick, and they have to be ruthless in killing what doesn't work.
Yeah.
And one of the things that a super app does very well, an advantage, is that you can afford to make a few mistakes here and there. So you can throw a lot of stuff on the wall and see what sticks because you don't have to keep acquiring a customer. Like if I were to go and make a standalone app in Kazakhstan, say I want to make a travel booking platform, it's going to be an incredibly capital intensive endeavor for me because I need to go in and acquire that customers and I need to incentivize them to book their flights and their trains and their buses on this app, which means I'm going to be running probably at a loss for a while.
Yeah.
But for Kaspi to do it, they can do it on day one. They can it's as simple as adding another feature on their app.
Yep.
And from day one, they have a set of about 15, 16 million active users ready to try this out. And if this doesn't work out, there's no harm, no foul. They can quietly deactivate that feature and move on without losing a lot of capital, without losing any customers, because you still have the core services that are really chugging along that can afford to let you experiment with what works.
Yeah.
And I think that's probably what they're doing is they quickly realize that, look, we have these kind of sticky users. So we need to really quickly throw as many things on the wall as we can. And hopefully a good amount of them sticks. And which if they stick, it's fantastic. We're going to grow that business and we're going to scale that rapidly. If it doesn't stick, great, no problem. We're just going to move on. And that's what I think they're doing with launching all these categories like mobile commerce, mobile groceries.
Yep. Travel,
P2P payments, tax reporting. I think they've also recently started registering driver's licenses and stuff.
Yep. Yeah. Driver's licenses, marriage. I'm engaged right now in Spain, and I'll tell you the process of getting a marriage license here is unbelievably difficult and involves so much paper. And frankly, when I learned that the people of Kazakhstan were getting their COVID relief payments via an app as opposed to in the mail, I was, embarrassed of my country. Talk about a way to make government efficient. Automate it with an app, with an actual technology company,
I think that's a very important point. So one of the things that I was concerned about when I was reading Kaspi is that this is such an obviously fantastic company, but what if tomorrow Kazakhstan government wakes up and realizes that, hey, Kaspi, you're making so much money, we might have to regulate you some more. And I think to avoid that problem in the future, they have basically been a digital partner to the government and said,
yes,
look, you want to digitize these services. You don't have to go ahead and do it yourself. We will do it for you. And we will do it at no cost.
Yeah. I did read that when the government started allowing people to pay their taxes via Kaspi, tax collection went up.
Oh, wow.
Meaning the government collected more revenue because it was so much easier to pay your taxes.
Wow. Yeah, I think that's a very important strategic move by Kaspi, because this way it's hard for the government to make a case to make Kaspi the enemy at any point. And I'm not from Kazakhstan, so I don't know how the government thinks about Kaspi. But should there be any issue, I think Kaspi is protected to a reasonable extent.
I think it's one of these situations, and I always tried to figure out, okay, what would a rational actor do? And if I were in the leadership position of Kazakhstan, just knowing what I know about the country and the company, I wouldn't have any problem with Kaspi. I do think the way things work in a developing economy like Kazakhstan, the risk comes with, if there was an impetus to do something, Kaspi's day in court might not be as just as, you look at a company like Google or Amazon or any of the big tech companies in the US have been investigated and brought to trial for, violation of the Sherman Antitrust Act and antitrust behavior. And they've all, they've fought all of those, and many of them have won. I'm using Google Chrome right now, and it's Google, baby. And rightfully so. I think in the case of Google anyway, in Chrome, I think that's rightfully so. But one might say, and I can't really refute it, hey, look, if the government of Kazakhstan gets tired of Kaspi getting too powerful and they want to do something, they can. And, I'm not so naive as to think, justice will prevail. Probably not. If the government wants to do that, they will, from what I can tell. It's not Afghanistan, but it's, it's not Switzerland either. So,
that risk always exists. If it can exist in US and China, it can definitely exist in Kazakhstan.
Yeah. So I do think that I don't see any real reason the government would want to do that.
Yeah.
I just don't think antitrust is on their top priority list over there in Kazakhstan. I just don't think it is.
I agree. Not when Kaspi is sort of driving the whole digital change and driving the economy. I think I agree with you that the risk of regulation, in any kind of regulation, whether it's sort of an antitrust or extra quote unquote taxes, that is low right now for Kaspi, at least from a Kazakhstan perspective, because they also got the go ahead to expand into Turkey recently.
We talked about some things that maybe aren't risks. Let's talk about really quick one more. I do think we should always just touch on it, which is, have you read through the Culper short report? Are you familiar with this?
A little bit, yes, I have. It was...
Okay. Yeah, so Matt Newell covered it pretty well. We're not the first people to write about Kaspi, but in my write-up, I just said, hey, go read Matt Newell's thing. But basically, and we should just say it because if people are getting interested in Kaspi, like we did, it's good to I think it's good to, at the very least, systematically refute some of the cases against it. And essentially, there's this report by Culper Research. They took a short position and released the report. And, it makes a lot of accusations. And one of the key accusations is that Kaspi's management misled shareholders about exposure to Russia. And from what I can tell, this is a pretty fraught bear case because Kaspi doesn't have any exposure to Russian sanctions right now in any way whatsoever. They just happen to have, certain people who are doing business who are Russian on the Kaspi app. But the report implies a lot more ill doing than is actually real. And I'll just point people again to Matt Newell's write-up on this because I actually think he kind of went through it pretty clearly. But essentially, Culper's report is it's really full of holes. It does have a few things that are a little sketchy, I guess. But, there's some murder. There's some interesting extortion trials and things like this. But first of all, this is all back in the early 2000s, and it's more about partners of Kim and Lomdatz, this guy, Satibaldi. Have you done any digging on this?
A little bit. So I think a lot of what Culper says, I couldn't find a lot of backing data. It felt a lot like a trust me bro kind of a report.
Yeah.
And another important thing that happened is during these sanctions, and this is, I think, after the Culper short report has come, is the P player, Baring Vostok, has effectively been separated. So the entity, it's been separated into Baring and Vostok. So Vostok PE, the private equity, still holds a large amount of the Russian investments. Kaspi, however, is with Barings, which is no more with Vostok.
Yeah.
So the private equity company that owns Kaspi is no more a Russian entity. And that sort of de-risks the situation a lot more than when Culper's short report was published.
Yeah. One of the other things that he talks about in the report is this Kairat Satibaldi guy, he was sort of one of the original shareholders until the London IPO. And he basically was involved in money laundering. He did. He's basically guilty of this and went to prison for it. And Culper basically says that he did it with Kaspi. And the implication is really big. The implication is here's a guy who's a shareholder of a bank using that bank, using his position to launder money through the bank. It sounds really bad. It sounds like Jamie Dimon laundering money through JP Morgan or something.
Right.
But the reality is that because Kaspi is such a big bank in Kazakhstan, it was just that when he finished laundering his money, he deposited it into his Kaspi account, just like anyone else would do if they were laundering money in Kazakhstan. So and it's these little, when you actually kind of get to the bottom of it, it's not nearly as large as the accusation is. I mean, yes, there was some pretty real ill doings on the part of a shareholder of Kaspi at one point in time. But, some of this is really just to be expected, in a country like Kazakhstan.
Yeah, I mean, 100%, right? I think some of them were like, oh, Kaspi uses the delivery lockers that are Russian made or something like. And I mean,
yeah.
I think at that point, those does not necessarily make Kaspi a bad company.
Yeah, and it's also that there's no, as far as I know, there's no sanctions on something like an e-commerce delivery locker in there's no sanctions on that.
Yeah.
There's sanctions on banks that essentially fund the war, so to speak. And there's a specific list of banks that have been sanctioned by the US, the European Union. But first of all, the bank in Russia that the short report mentions is not sanctioned. It'd be one thing if Kaspi was caught loaning money to fund Russian military operations. That would be a different story. But Kaspi doing business with a bank that's Russian completely separately or having some of their deposits in a Russian bank, if the U.S. sanctioned that bank, they could just end that partnership. It's not, none of these are, critical choke points of Kaspi's business. They're just, of course, there's some connections with Russia. They share the largest land border with Russia of any country on earth.
Yeah.
So, of course. There's also 4 million Russians living in Kazakhstan right now. So anyway, I thought it was,
It was an interesting short report, but yeah, like you pointed out, it's not an existential threat for Kaspi at any point. And it was Baring Vostok that saved Kaspi when in early 2000s. So you can expect some level of interactions with Russian businesses and Russian people because that's how the business was started in the first place.
Yeah.
And it just goes back to the earlier point we discussed that if they were, fraudulent entities, so to speak, they wouldn't be taking all the pain and the money to list themselves in NASDAQ while also being listed in London Stock Exchange.
Yeah. Yeah. I mean, they've been audited by, I think, Deloitte. I felt like the short report in many ways was trying to scare shareholders with the Russia word, which, look, hey, I can scare you out of Kaspi with, with Russia, but not that way, not with that, not in the fear of sanctions. It's more of the concern of Russia itself. So I guess, look, maybe we should start talking about some of the things that, perhaps we wish were different about the Kaspi situation. And I think maybe first and foremost, the one on my mind is always inflation.
Yeah, I think the Kazakhstan's tenge is devaluing. It's probably devalued about 20% over the last 3 years.
Yeah.
And the country has been having extreme amount of inflation. And their recent entrance into Turkey is no better.
Yeah.
So
much worse.
From one stable, they're basically going from one unstable economy to the other.
Well, I really wanted to remodel the earnings growth numbers, at least against inflation, against the dollar. So, I was looking at, okay, how much did the tenge fall relative to the dollar from 2016 to 2025? And it's about 37%, all things considered. From 2016 to 2025, the tenge fell 37% against the dollar, which isn't great. I don't like that. It's like $100 in the, if you just bought $100 worth of Kazakhstani tenge in 2016, you'd have $61 today.
Yeah.
So that's not great. But that's about a 5.2% drag on intrinsic value. So it's like, I look at this sort of like, a cup with a hole in the bottom of it. And as long as it's a 5.2% hole and more than 5.2% is going into the top of the cup, it's okay. And the other thing I'll say is, I don't want to say how could it get worse, because of course it could get worse. But now is not a great time for the ruble, nor is it a great time for oil prices. And Kazakhstan's economy is sensitive to both of those things. So, I'm not going to stand here and say, okay, it could never, so it's bad now, so it could never get worse. That's not true. But I like buying stocks when the macro picture in the geography scares people. I like that because it means that there's a basic discount probably baked into the share price. But like you said, we're going into Turkey.
Yeah.
And it is not 37% for Turkey. That might be the monthly inflation in Turkey, in the lira.
I mean, I think one of the things that I quickly sort of realized in my investment process is to focus on what is the knowable versus what is the unknowable. And I think in any company's performance history, as well as looking into their future, the macro scene is not something that we can inherently predict or we can inherently model into how this is going to affect the earnings growth. And I don't know what is going to be Turkey's inflation rate next month or, 2 years from now, or even Kazakhstan's inflation rate, how the tenge is going to behave. There might be a drag in some years and there might be also a boost in some years. And that is part of the game. And that unpredictability in the macro environment is built in. And that is why we investors seek a margin of safety. That is why we...
Yeah.
Now, if we were talking about Kaspi right now and it was trading at 30 times earnings, I think the macro risk is a huge thing to talk about.
Yeah.
When we're talking about Kaspi at 7 times earnings, we do have that margin of safety that, 2 years from now, the tenge continues to decline or, is like say 5% or 10%. We are reasonably protected from it because we bought the company at a low valuation.
Yes.
And the same case what happened even with, for example, China. It wasn't an inflation or a tenge story, but it was a regulation story back in 21 and 22, where the macro of a scene in China was called uninvestable. And because everybody predicted that China was done and dusted, and this is how it's going to be forever. And suddenly in the last year, The sentiment quickly changed. The government sentiment changed. The government realized they were overreaching. The government decided to pull back. And with that, the investor sentiment changed. And then suddenly China, as a growth country, is coming back a little bit here and there. I can see some of those sprouts. So similar to that, it's really hard to predict what the macro will do. And anybody who does that should be probably read with a little bit of caution. And we seek that margin of safety because we don't know these things and we don't know how it's going to behave. Because Turkey has done several missteps during the whole post-COVID boom in terms of reducing interest rates when their inflation was already peaking.
Yeah.
So it is possible that the countries can do stupid things.
Erdoganomics, I think it's called.
Yeah, exactly.
Which is basically Erdogan keeping rates at like super low and pumping the economy full of money. And this is the growth strategy, but it's also the, hyperinflation strategy. But that doesn't mean it's forever.
Exactly. And as far as, 10 years down the lane, we are convinced that this company is going to be better than it is today. I think there is a higher probability of a reasonable return.
Yeah.
And that is the most we can do. I think that is where, just to sort of tie this all up, I would say where the macroeconomic picture starts is where sort of the knowable boundary ends. And beyond that, it's a lot of guesswork and not necessarily everything has to pan out that way. And, we have to just live with it.
Yeah. The idea of trying to predict macro conditions in a country is so wrought with exceptions, asterisks, unknown unknowns, and known unknowns that it's almost like a fool's errand, I think.
Yeah.
And what you said, I think, is right, which is we have a margin of safety. This is a dirt cheap stock.
Yeah.
And it's one that's growing, even adjusted for that of inflation. I mean, I give it like an 8% intrinsic value drag from inflation. Still, you got 7% growth with 15% year-over-year earnings growth in Q2. Even if this business does not grow in Kazakhstan, but if it just simply keeps pace with inflation, I still would imagine you would get a good return.
Yes.
If they're buying back shares, they're paying a dividend. I mean, it's 7 times earnings. If they're not losing money, adjusted for inflation, then, it's just a business at 7 times earnings, which is great. If you gave me a bond at that sort of a yield, it's probably 15, 16% yield.
Yeah, it's a 14.586%. Exactly, right? I think even the buybacks haven't started yet. They have paused the buybacks and dividends mainly because they want to expand into Turkey right now, which I think is the right move. I've seen a lot of threads on Twitter bemoaning that, they should restart buybacks. But I do believe that as much as the stock is undervalued and they should be doing buybacks, it is fair to think that I want to expand my business into Turkey and drive the growth there, which should take precedence over doing these buybacks. I think it's fair as far as they don't take undue risk and add that risk to the balance sheet, which I don't think they're doing.
Yeah, I completely agree. I think they said in the last earnings report I read, they mentioned that, 2026, they want to divide capital deployment between, shareholder returns and growth. And I think that just is corporate talk for buybacks and dividends, but also Turkey.
Yeah.
And I have no problem with that. I wouldn't want a company in a region with unstable, very dynamic macro backdrops to take excessive risk. This isn't the US and it's not Coca-Cola in the US where they can, just rack up debt and they'll always have more access to capital. Kaspi, if the tide goes out on the global economy, Kaspi is a bank and it needs to have its own sort of intrinsic stability. So I have no problem with cautious capital allocation while they're expanding into an extremely tumultuous geography, Turkey. So I have no problem with that. But that is, for anyone listening, that's a lot of the reason the stock has sold off recently and is at this price is because investors saw the dividends get cut or suspended, really. And they, just ran for the hills. But that's, not for nothing. Sorry to go on a tangent here, but that is good capital allocation. That is exactly what capital allocation is. Capital allocation shouldn't be, we're going to pay this dividend out no matter what, all the time, because that's what investors expect. It's if we see a good place to deploy capital where we're going to get a good return on that capital, even if Turkey seems like a scary place to do that, it's not what people want. But that's what a good operator does, in my opinion.
I completely agree. I mean, we can't take a cookie cutter approach everywhere and say that no matter what the company is, they need to do buybacks and dividends. In fact, I have seen some companies which borrow money to pay dividends. There was a Norwegian offshore driller that I was owning for like about 3-4 months when I realized that they were borrowing money simply because they could keep the dividend on. And that's not good capital allocation. But it is interesting, right? I think Turkey, as much as the macroeconomic conditions seem to be, it seems to be one of those places which is ripe for a super app. And my guess is Kaspi is trying to recreate that kind of a super app in Turkey. And I think that they did two interesting things. One is, of course, they bought the e-commerce company Hepsiburada in Turkey. The second thing they did is, I don't think the second acquisition really got the limelight, is they acquired the Rabobank Turkish subsidiary.
Yeah, which is just basically a license.
Yeah, exactly. Which is barely a shell of a company. It's a banking license. It has 30 employees. They have no loans, no deposits, and nobody even knows how much Kaspi paid for it. And Turkey is also one of those places which have the banking system is ripe for disruption, and their e-commerce or the e-retail place is also ripe for disruption. It remains to be seen if Kaspi can do it, can create that kind of a super app in Turkey. But if anybody could do it, I would think Kaspi would be first on the table.
I completely agree. I think there's a lot of similarities in the setup. I mean, the thing is with Turkey, there are, Amazon's there, and there are other retailers and e-commerce companies that have a presence in Turkey. It's a larger economy, I think a little over 80 million people. So there is competition there in Turkey, but I've heard the bear arguments that, hey, look, they were able to do it in Kazakhstan. They got lucky. It was like, a slam dunk, pitch right down the middle. But, once they go into Turkey, it's going to be another story. They're going to have to compete with players who are already there and everything. But Hepsiburada is not the number one e-commerce company in Turkey, but it is a large e-commerce company in Turkey. And it has a presence, it has existing software. And if Kaspi can actually make the changes that they want to and create something like the Kaspi app, maybe not exactly like, at least not for now, but if they can start, A, getting a little bit of profitability out of Hepsiburada, or B, start gaining market share, I think the market will change on a dime. And people will go, oh, wait, this isn't just a company that got lucky in Kazakhstan. This is a great company run by excellent operators.
I agree. So in a lot of ways, Hepsiburada, if you really look into the history of this e-commerce player, Hepsiburada in a lot of ways is culturally similar to Kaspi. They are called the Amazon of Turkey. It was started by the daughter of a billionaire family in Turkey. This family owned a lot of media properties and magazines and newspapers. And the daughter basically decided to be the trailblazer and start a e-commerce company. She was educated in the US. She came back to Turkey. Instead of taking over the father's business, she decided to open her e-commerce company, which was, e-commerce was back in 2004 was becoming like a big thing, just like, in every other country. And Hepsiburada was able to scale pretty quick. And I don't have completely verified numbers, but you're right. It is the second biggest player after Trendyol. And Amazon Turkey, interestingly, is the third biggest player.
Yeah.
And I think what happened there was the family, the Dogan family, who owned the Hepsiburada, quickly became out of favor with the government, who was in the party. So the government forced their hand. They levied a huge amount of, I think they levied to the tune of 4.5 billion in unpaid taxes, 4.5 billion US dollars. And this is not Turkish lira. So a lot of, they had to sell off their crown jewels, which was their magazine assets. I think that is why they did sell the Hepsiburada as well.
Right.
But they did sell it to Kaspi at, I think, about 0.75 times annualized revenue, like 0.75 times FY25 revenue. That doesn't really strike me as a very expensive deal. I do think Kaspi got it pretty cheap.
Yeah, and relative to Kaspi's own, I think it was essentially like 1 year of operating cash flow, if not less.
Yeah.
Yeah, it's like about that, right? Okay, no, so we didn't take on a ton of debt to do this. We didn't have to sell a bunch of equity. No, Kaspi just spent their cash that they earned on a company. It makes a lot of sense when you just take the last 5 years in Turkey out of the equation.
Yeah, and it's less than what Kaspi earns in a year from their core Kazakhstan business.
Mm-hmm.
So
yeah,
one of the things that usually concern me with all these M&A is that these CEOs, they have these wild, optimistic, testosterone-fueled desire to, go make these large acquisitions. And quite often they end up betting the house on it.
Yeah.
Like you said, they either take a lot of debt or they issue equity. I don't think Kaspi did any of that. They funded the entire acquisition through cash flows, and it was 1 year of cash flows. So again, coming back to the downside here is at best an impairment charge. As far as they don't have to sink in any more capital, which I don't think they have to, because Kaspi Burada is at about like a 3 or 4% EBITDA margin. Not anywhere close to what Kaspi is doing in their core business. But this business does not require a lot of capital investment. They could afford to go with this acquisition for a while and really test this thesis out that can they create another super app in Turkey? My answer is I don't know. Maybe they can. Yeah. There is a good chance they can. They have done this before. But on the off chance that they don't, I don't think it's going to be an existential threat to Kaspi.
Yeah, the only situation I could see it ever going wrong would be if Lumdots just like suddenly became a less disciplined capital allocator and refused to admit defeat and did pour capital into it. But yeah, like you said, this is not a capital intensive business. We're talking about e-commerce. We're talking about payments. We're talking about very capital light business models. So it would really have to be a failure on the part of management, which has so far had such a good record of admitting when they were wrong.
I agree. I mean, there are times some companies tend to hold on to their losers for a long while. Kaspi is not one of them. They're really quick to, take it behind the barn and shoot it.
Yep.
And the other thing is Lomtadze also owns a significant amount of Kaspi stock. He has also mentioned that in the earnings call that he is one of the majority owner and he hasn't sold any of his shares. So his fortunes are pretty much linked with all the shareholders of Kaspi. So any move that he would do that would harm the company in the long term would mean it would harm his net worth in the long term as well. And that's a good place to stay.
Yeah. If he thinks this is the right decision and he's willing to do it anyway, I think that's kind of a good sign. The shareholders don't always know best. A lot of the time they don't.
Yeah, definitely. Just to sort of put the final bow tie on it, I do think Kaspi is a very ambitious company. It doesn't strike me as one of those, we're going to take it slow and grow at a easy pace that we can work with. They do think and behave like a startup, very aggressive in how they want to expand. And they're very clear about it. They're very clear that the speed at which they perform, they also want to make sure that any of the mistakes are quickly detected and killed. And they have the kind of the leadership that enables them to go at that speed. And I think that's what makes it I would say it's like a tech company-ish nature, like the way Amazon did in their early stages.
Hey, the only difference is that Kaspi is profitable.
Yeah, exactly.
And Kaspi Burada is just a big bet.
Yeah.
I mean, but not a house-breaking bet.
Exactly.
So you own Kaspi. You got a 5% position. This is, I'm guessing, started in 2024.
Yeah.
Okay.
So I was one of those early people who got in early. I think that's the value investor curse. You're quite often early into the game. And then you hold on. I don't know if you've noticed, but the other thing is that quite a few of these credit rating agencies have started to upgrade Kaspi's bonds. So S&P has upgraded it. Fitch has upgraded it, I think, second half of 24. And this year, early 25, Moody's has also upgraded it.
Interesting.
So I think the credit agencies are catching up. I think that's a green shoot in terms of shift in sentiment, I would say. But we'll see how it goes.
Yeah, it is just kind of a wait and see. And it's not, look, this is a high risk, high reward type of investment in the sense that, like, there are real risks to Kazakhstan. And it's not written anywhere that everything can go even more to shit. I mean, I wrote pretty extensively about the balance of Russia and China. I mean, Kazakhstan's political situation domestically is fairly stable from what I can see, but, they have arguably the worst neighbor on earth. And, that sucks. And you know what? They can't move. So, I mean, they could expand into Turkey. Not that that's much better, but, there's only so much you can do about Russia.
I think, you had written about how the government was trying to become like an ally for both Russia and China, so not to antagonize either of them. I think that's a fair thing.
Yeah. The thing is with Russia, the idea to me that Russia would, if or when they finish this war in Ukraine, that they're going to just turn around and invade the next person it seems unlikely. If that was something they would be interested in, it seems like something that would have to happen at least later on. And considering that it's almost guaranteed that any sort of military action in Kazakhstan would be a direct threat to Chinese interests in Kazakhstan, which are substantial and they're growing, is the other thing. Kazakhstan they've pulled back some of their trade with Russia and they've ramped it up with China. So they are clearly trying to keep Chinese interests in their country because they know it's a protection. And it just seems to be the role of Kazakhstan in that region, which I don't envy the diplomats, but perhaps that's enough to keep stability in the country, so much so that it wouldn't have a direct impact on Kaspi. And, you think at a certain point this is going to have to end. And the only thing I'll say, and one of the best bear cases I've heard so far for this entire thing was one of the Margin of Sanity subscribers sent me a Wikipedia that's just the list of wars involving Russia. and it's so long. It's so crazy. It's so long. I learned so much about what happened to the Kazakhs over the last 100 years at the hand of the Soviet Union and the Russians. And it's just like, Jesus, man. I don't want to get out of this without saying, like, if anyone out there is Kazakh, you guys should be so proud of where this country is right now, because I don't think anyone would have bet on that. But we're here talking about it, and part of the reason I'm considering betting on it is because I can see what's happened. It's incredible that they're doing as well as they are. I have to say it because I was really moved, I guess, hearing the story of Kazakhstan.
Wow. Yeah, they weren't given the best hand, but I think they've done reasonably well.
AK, I don't want to keep you too long here, but I really could always just talk about this all day long.
This has been super fun.
Oh, yeah. We're going to have to do another episode, and I would love to talk to you about India. I would just love your perspective on it as an investor from India who follows this sort of, I don't want to say doctrine of Ben Graham and Buffett and everything, but I'll just rephrase that as a respectable investor.
Definitely. I would love that.
A little game I like to do at the end of the podcast. I say I like to. It's episode 2, but
awesome. Let's go.
Yeah. So this is just like some quick word associations. All right. So I'll say a word and you kind of just give me the next word that pops into your mind or a short phrase that,
Sounds good.
Uranium.
Nuclear power.
Natural gas.
Underpriced.
Interest rates.
No idea.
You and Jay Powell agree. Yeah. Gold.
Missed it.
Yeah. Same, buddy. Rare earths.
Unsure.
Yeah, I think we maybe missed it on both directions.
Yeah.
I
used to own a little bit of this METC, which is Ramaco Resources.
Oh, yeah.
Luckily, I didn't lose money, but then I am not, I think apart from AMR, I don't own a lot of mining stocks.
Okay, so we both own AMR. We're going to have to talk AMR at some point.
Definitely.
Yeah. So we can wrap it up, but do you have any write-ups you're working on that you want to let people know about?
So I'm working on mostly the holding companies. So I've been looking at holding companies in Europe. So companies like, wrote up Exor recently.
Okay.
Because I was looking at a cheap way to buy Ferrari company. The Ferrari stock trades at like 36 times earnings. And one of the ways I found to buy it at 15 times earnings was through Exor, because Exor holds about 20% stake in Ferrari, and Exor trades at a 60% discount to their net asset value.
Wow.
And on that same note is what I found Fairfax India. So I'm looking at holding companies and looking at more holding companies. So if you come across something, let me know.
All right. I absolutely will. Awesome, man. I can't wait to talk to you again, honestly. I think
Me too. It'll be super fun.
AK, thank you for coming on the Margin of Sanity podcast. It's great having you here, man.
Thank you so much.
Thank you for listening to the Margin of Sanity podcast. And a huge thanks to AK for coming on today. I really have to say that AK is one hell of an investor who really does look under the couch cushions, so to speak. And we spent a good deal of time talking off air about India and some of his other investments in holding companies for airports and Ferrari, as well as a very unique fiber optic idea that I just hadn't heard of before. For the sake of time, I want to save those topics for another day, but if you're interested in these hidden deep value ideas and looking many, many layers deep on a company, AK is publishing all sorts of awesome stuff with a lot of detail. I can't recommend his Substack enough. Unfair Advantage by AK, check it out. And if you enjoyed the show, please give it a like, a comment, a 5-star review, or a restack if you're listening on Substack itself. All that engagement really helps us out, and it helps me rationalize taking the time to produce this stuff myself. Big thanks to AK for coming on the show, and thanks to you for listening to the Margin of Sanity podcast. I will talk to you later.